This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So have you been in a situation where you saw a stock that had already triggered, one that you might have been watching or maybe not, but you saw it was a perfect trade setup, but you missed the entry and it's maybe been an hour or 2 hours since the trigger clicked in and the stock has moved up a little bit, and possibly the day, maybe a day later or something like that. And the question becomes, what do you do from there? Well, I want to show you a trade setup that I took and I'm still in that will give you some answers to this question. I think it will really help in this situation. We can do it mathematically. It'll tell you when to do it, when not to do it. All right. Now, if you want to learn more about some of the techniques that got me in this trade, you can go and click the link in the description to find out more about my book, which I think is a great place to start. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, I'm looking at the chart of American Express. In fact, I've got my grid up with a monthly in the bottom left, weekly bottom right, a daily in the upper right, and then an hourly in the upper left. And I'm actually going to switch over to TC2000 really briefly. I want to show something that's going on. Look at the monthly chart and then the weekly chart. This catches my eye when I see something like this. This is a narrow range on the monthly, and then on the bottom of this move, of this pullback, is a narrow range on the weekly. All right. Now, I really do like looking at the candlesticks, but when I browse through charts, I look at these candles with these NR7 bars. I mentioned this before in a video recently, and I just want to tell you that in my subconscious mind, stuff starts to click when I see those narrow range bars. All right, so look at what's going on the monthly chart. So we have this move to the upside. We've got good momentum characteristics, both based on the MACD and the ADX, and then we get a pullback, and then we make this move up. We're up 2 months, and then we get, again, a narrow range month that could be the sign of a reversal. But then if you see what takes place, we actually open below, right at the low of the prior bar. We push to the downside and then reverse back up. All right. Now, I've talked about this in the past. When I see this, I'm thinking that that's a reversal, an opening reversal basically for the month, and that there's a pretty good chance we're going to at least get back up and take out the high of the narrow range bar to the upside. All right. This is real important. You want to recognize these sometimes when they open up. They're going to go in the wrong direction first and then reverse back and go to the upside. Now, we did this decline phase, and then we get a narrow range bar on the weekly chart. I want to go into some details here on this trade. So we're going to look at this. We make a move to the upside, and we get a nice pinch play developing on the pullback. Now, recognize this. There's a couple things that have gone on here. First of all, on the way up, before we pulled back, we had very strong momentum characteristics. That's confirmation of the uptrend, and the odds favor that after a correction, or a pullback, we're gonna go back and at least test the high. Now, if you notice, we had really strong reading there. We had a pretty decent size reading here as well, meaning it wasn't like it stayed below 25. It actually moved up, and the selling actually kept the ADX above the 25 level on this decline. So it's not the type of situation where I'm necessarily going to buy right away. I'm looking for a little bit of signs of improvement if I'm going to take this trade. Now, really what takes place here is we don't see a significant amount of strength in DI, but enough. We get enough strength to the upside where green gets back above 25. And then on the pullback, you'll see that the red DI couldn't get above 25. So is this a real powerful signal? I wouldn't consider it to be a real powerful signal, but I think it's good enough to be willing to take the trade. Now, I would be thinking that I'm probably taking this off of the MACD signal, and that this isn't hurting it, right? I'm willing to take it, and I'm thinking 2 to 4 weeks to the upside, 2 to 4 weeks. Real important in this situation as we kind of determine whether we want to take the trade or not. So again, we get the pullback, we get a narrow range bar, and then we get a bar that causes the trigger on the weekly chart. All right. Now, I'm typically going down one time frame on the daily chart to determine if I've got a entry signal. And if you notice the way this played out, we broke the downtrend line, but we had overrun. All right, so I'm not necessarily going to take the trend line break. I need a second signal. We came down and we kind of tested this 18, and then we had a very strong bar to the upside. Okay, now we had green DI kind of kicking in again at that point. So in this bar, when I see this green bar developing, I'm pretty intrigued by this, right? Because this is essentially a 1, 2, 3 to the upside. It's also a tested 18, which is really what I'm looking for when there's overrun. I'm looking for a pattern that pulls back and holds the 18 to the upside, and then we get some strength to the upside. Now here's the kicker. What I saw on the hourly was the reason why I was willing to take this trade, or still willing to take the trade, as it gapped up and then showed really nice strength. Now, if you look at this on an hourly basis, you can't tell, but it took out the 30-minute high. So this bar was the 30-minute high. When it took out the high of the 30-minute bar, it was really where I was interested in taking this trade. All right, so as this crossed above the 30-minute high, because it essentially opened up and just pushed to the upside. It wasn't a reversal or anything like that. So I think we want to be aware of that. Now, let me switch this back to an hourly chart. So we've got the hourly basically triggering me in to the daily, but I'm going to use daily risk as a weekly daily trade. All right. Now, if I take this trade and I know I'm at the middle of this bar, it's already moved up. I mean, I'm not catching this right as it's triggering. I'm not catching it early. It's a little late, frankly. It's not really that great of an entry. So at this point, I've got to make a determination whether I just, cross it off the list and go look for something else, or whether this is a viable trade still. The way I go about doing this is I look at the average true range. So it's 593, which multiplied that times 2, it's almost $12, a little bit less than $12. All right. Now, if my entry is right around, let's call it 314, 315, something like that, I'm going to take 2 times the average true range and figure out where my stop is going to be. My stop was going to be underneath the lows of this consolidation, this pullback, and below the 18 moving average. All right. It basically would have been the entry was good enough where the stop would go below this whole consolidation period, which is essentially what the minimum criteria for me. I need to be below that level. And the reason is that I don't want to get caught up in a situation where it pulls back to or above that area and then turns right back around. And then I've got to decide whether I get stopped out. Do I take another trade in this? And then I could end up taking multiple trades and multiple losses. I don't really want to be in that position. So I want to make sure it's going to take out all these lows and kind of obliterate the chart, at least for now. All right. So that's criteria number 1 that has to take place in this situation. My criteria number 2 is that the target needs to be hit. Target 1. A 1-to-1 criteria needs to take place before I hit the highs. All right. So I need to be able to take a profit before I reach this peak. If I have a situation where I buy this in the middle of this bar, all right, and my stop is underneath here, and that's fine, but it moves up and it's got to actually break out. It's got to be a breakout pattern in order for me to get to a break even. Then I don't really want to take this trade, right? I mean, because the reality is that I'm not sure if this is going to go to a new high. I don't necessarily have the strength on the weekly or the daily based on the ADX. I have 2 to 4 weeks in my favor potentially, and we're buying on week 2. All right, we're on week 2. The question becomes, does it become a 4-week move or is it just a 2-week move? And if that's the case, I need to take a target and get this to a break even as fast as possible. So my 2 criteria in this situation, if I buy in the middle of this bar, which is approximately where I bought, and at the point, I didn't know it was going to go higher. I bought it here as it was moving up. I didn't have the rest of the bar. I didn't know that was going to take place. So I take this and I decide, okay, I know the stop's going to be below here. It's going to be below the 18 and it's going to be below this consolidation area. That's criteria number 1, all right? Below the key levels for a stop placement. My stop placement's going to be good enough, all right? Criteria number 2 is that when I take my first target, it's going to be at or below the highs. I don't really want to be at the high. I prefer to, so what I would do is maybe look at the closing high of the bar, of the highest bar, and then go and look and see where that is and make sure that target 1, your R1 level, your first level of risk, right? If I take a trade with 1 unit of risk, I got to make sure I'm hitting the target at that 1 unit of risk to the upside. Because what I can do from there is I can take my target and then I can raise the stop on the balance. And that's exactly where I sit right now. I've taken a target. I've got to stop at a break even. And if this were to turn around because of the market or because the stock is hitting the old high and failing and it just comes right back down, then I've taken a small win and I'm out of the rest. All right. Now, if it keeps going and it breaks through, I have 3/4 of the position. Now, I'm going to take a target at 2. All right. And I'm going to take a target at 3R as well. So 1R, 2R, and 3R. And then I'm going to trail a stop on the last one. Now, why am I doing that? Because that is the trade management approach that I use when we have good market conditions in place. And right now we have low volatility and positive trend on both the weekly and the daily at this point in time. So I know it's overbought. It's not, I mean the market, I know the market's overbought. It's not an ideal time to maybe play these, but these are the criteria that I'm using, especially if I don't have a whole lot in the financial area, which I didn't have any other financials. So I wanted to kind of get some financials on there. The financials have been trading pretty well. So now I'm in a pretty low risk position. The only risk I really have is if the market were to gap down and cause this to gap way down like this. I mean, that's a possibility. It certainly is. Now, what you might want to think about in a situation like this, my stop's here. All right. Let's say I start to pull back and I've hit one target and then let me undo that last one. And then I get a close. Let's say I get 3-bar pullback. Cat, I keep messing this up. And I get a pullback that closes like right there. Well, I might just exit the trade, right? Because I don't want to take a lot of risk on that last position. And I know if I'm really close to the stop, I might just scratch it from here. Maybe it ends up being a really small win on the balance. Just because I don't want to take the risk of an opening gap down. All right. So these are little nuances that you can do in these trades that I think will really help. But learn the risk reward criteria that you have to have. Got to make sure the stop's going to go below the last low. And in this case, it was a sideways consolidation. A lot of times it'll be a clear low, right? And you want to make sure that the stop's going to go below that. And then you also got to make sure your first target is below the last peak. All right. Use this to your advantage. I think it'll really help. Or you can click the link in the description to find out more about some of these techniques. Have a great trading day.